off. Okay, cool. So, was going to do a little bit of stuff about like scalps, or so excuse me, swings, gain, loss of level, and then trade execution for actually trading. Um, we actually had a really good example that came up here right now, even just for lower time frame scalp. Essentially, this is one of the best area. I know it's a weird one because we're looking at it from like the 1 hour, and even on the 4 hour, it looks a little janky. But we're really use this for like lower time frame because this is a great example of a loss of level on a lower time frame. So what you can be kind of aware of, especially when you look at lower time frames, saying like the 15-minute, you can get some of these quick scalps really easily by using your brains and saying, okay, well, we have an hourly close, on this candle. At the end of this 12:45 candle where it closed, that's essentially the end of that 1 hour period. And then you would know, based off of 4 hour periods, I'm UTC plus 2. Every 4 hours, a 4 hour period closes. So you can still, be mindful of that on the lower time frames. But even here on like the 15-minute as an example, here's essentially some nice little scalping structure. We get the 1 hour closing below the level, right? That's very, very clear, very simple. Then what's our first initial potential short? You short the level that it lost, because what you're trying to see is essentially we get the close below the level. What do we want to see now? This isn't a validation of the short. This is what we want to get as the short. And it's a perfect example of what we can actually use and do to scalp in these positions. So even on lower time, much lower time frames, using your brain and saying, well, if that's 12:57, I'm on the 3-minute. That's the close of this candle is essentially the close of the 1 hour, right? So what happens in this zone that we can use? Here's some of the stuff that I use, especially when we're talking about testing these levels. Now we see automatically where are we at? We're at the July Q3. That's a big level overall. And the fact is we've been grinding to the downside from failing structure earlier. So, we had the nuke off late last night, not too bad, but as far as price action goes, had a bit of a Bart Simpson that came back. Buyback was weak. Continuation failure all the way down, new lows created, bounce from the higher low to run into a flat, and then higher time frame. What did we end up getting? We got a retest of all the structure that we needed to test the upside. Two really strong failures, and then movement back down. And now we've kind of like capitulated. But, we get the initial bounce off the weekly, pop through it, dump down to the July Q3, bounce, continuation, bounce, continuation. So even in like zones like this, people are trying, really, really hard to effectively take positions and long, even though we're breaking down, we're still losing structure, we're still losing levels. So what you can do with this, when you actually see a loss of level at like, say, again, I'm on the 3-minute, use your brains, 12:57, that means we're ending an hour. We're closing below a major level. We want that continuation failure down. And here's some stuff that I can use to help me out. So my initial, again, short position is I want closes below, and then I'm going to short the retest failure, and then I'm going to take a move away. How do we find targets? Go on the 4 hour. Where are we at now? Did we come to anything really important? No. What about the 1 hour? Anything super important in this zone? No, not really. So how can you make good profit targets if you're still dumping, essentially? So one easy way to do that is to use your little handy dandy measuring tool, or you can use a price range, right? If you're targeting percentages and prices, what do you start seeing past 50 cents, 50%, about 60%? What's happening? Well, about anywhere between 60 and 75, 0.6 and 0.75%, you'll start getting some massive liquidations of people who are 100xing essentially the July Q3. That's all you're going to get from it. And that's where we've gone now. From that essential low, we've gone down to a 0.6. 0.75 is around about there. Again, nothing too crazy as far as structure. We're kind of just nuking into the ether. But what it allows us to do then is to basically say you could take aggressive targets based off of structure. So an example of this is if we're taking the 3-minute, and I really, like I said, I really love the fact that it's giving it to us right here, right? And we got the short off this position. What's the invalidation? Well, for me, I don't want anything that essentially comes back above, probably this. And the reason for that is we have the low structure here that's just below it, just by about $20. And going above it, there's a pretty good argument that we're going to start moving to the upside. And what about to the downside, profit target wise? What's my minimum risk reward? Can I hit 3-1 on my profit target? Yes. That's going to be the biggest thing in my mind, is that if I can't get a 3-1 or better with something like this, okay, I want to short the July Q3. Once, because we close below it, you short it to test essentially there. And then you go to your first profit target. And there's a lot of things that happen from that point. When it comes to actually planning the trade, you can set your risk reward closer and tighter and say, hey, well, if it goes here, I don't really like it, because now, price is going back above July Q3, creating new local highs. And what that ends up doing then is almost invalidating the short anyways. So the tighter you can keep your risk reward, that's fine as far as your stop losses. The problem that comes into place is that if you get stopped out, there isn't that, just because you get stopped out in a position, it doesn't mean that there is inherently a invalidation of the trade, right? So what would invalidate the short? Price must do this to invalidate the short, right? So our first level of invalidation is essentially reaching that level. Does that make sense? So what's our first now order if we're breaking above? What's our first potential new flip of level if we gain July Q3? We can then essentially plan the trade to go long. And this starts to come into like flipping of level, right? And where's the levels that we want to target? Probably the weekly open. It's a major untested level. Pretty good risk reward. It'll allow us to have a little bit of a flip of level. And again, like I said, this is how you're going to be playing the ranges the most as far as trying to catch both sides of a trade. So you've got the short now. You've taken at least one profit target. Your stops in profit or slightly above your entry, right? Because the reason you want this is that even if it stops you out and continues moving away, you'll have a second chance to re-enter because it's now essentially failing structure or continuing to fail structure. I'll just move this over there so we have it out of the way. So even if it comes up here and stops you out, you can then re-short on a secondary failure of where it stopped you out from. Where's the invalidation of the short? The invalidation of the short is gaining the level you lost. And the easiest way to look at it is this. If this was our condition to enter a short, which is valid, what's our condition essentially to invalidate the short? Well, it's the level that we lost because we're shorting, right? So this July Q3, this at 34.75-ish, that's the level that we lost, right? We lost it, closed below, lost it, that took us to the low. If we gain that level back, that's the level that we gain back as being the most significant level that we've lost to the downside. So with this type of structure, that's why it's so important overall to kind of like, especially if you're on low time frames like this, that you have your invalidations. So like I said, in this area, what is valid and what is invalid? The short is valid until we gain that level. If we gain that level on this time frame, what can we do? We can then target the upside. What if it just messes you up and it goes bounce and then it goes back underneath, right? Because that's also a valid position. Well, again, this is why the better the risk reward ratio, the better, because then all you do is flip your bias and you can re-enter the short as you lose the level, close, and bearishly backtest the July Q3. So this is how you kind of like can look at these levels as far as gaining, losing, and why they're so important higher time frame. Again, the 3-minute, I don't recommend it to people. Most people will get stuck if they start trading on the 3-minute, they overtrade. And they don't just overtrade a little bit, they overtrade a lot. Or they'll get stuck and sucked into the 3-minute and be like, well, look, we're doing all this stuff on the harmony and all this jazz, but what are we doing on the 4-hour? What are we doing in the higher time frame structure wise? Are we actually doing something important? Yeah. Right, we're failing the level that we gained back on over the weekend, right? From Friday, Friday was a nice close right into the structure. We had Saturday open, which was the July Q3. We gained it come late Sunday night, gained the high of the next level or the little range we made. So this, right, which ended up being the weekly open. That's a very clean gain of level for continuation. We created a new high. So when you're shorting, you're essentially now shorting only the fact that you've lost structure and lost trend, right? And the problem that most people have, like I said, is they'll get sucked in the 3 minutes, kind of like in a tunnel vision type of thing. Whereas the better object in this zone, when you talk about like gaining and losing levels, is looking for the overall, like the higher time frame to the lower time frame. And if you can plan out what you're doing on the higher time frame, which is good, right? We've got some really important structure down here at 30K that's untested, right? We have untested structure down here left to do. And now, essentially, what we're trying to do overall is to regain structure to come back up to test stuff that we've lost. So first, right there, are there any questions about that kind of gain loss and trade and validation? Yeah. Yeah, I just did. Does that make so technically, yes, right? We had the ability, and we talked about that on Monday because technically we made a lower high followed by a lower low. What's the invalidation of that? What invalidates that being the trend break? You have to make a new high. Exactly. So you make the higher high, which invalidates the potential trend break until we now lose that level. And what's that level? 30K. You lose 30K, that's all that matters. Because if we get this, you can try shorting the low of the range. That hasn't worked out for people trying to short the low of the range. Again, but you can do what's called a secondary failure position. So how that would look is you come back down, you break structure, you close, you come back up and bearishly retest, and then you essentially pass this level. You pass the low that we create, the initial low that broke us out of the structure. So your entry would then look something like that. Or no, not the long. You look for a short, right? It would look something similar to that. And then you can start, planning out your invalidation levels, talking about, in the more local time frame structure where you'd want it to be. Would you have it to the first profit target, which is your major level at May, that type of stuff. And I think something as well that's so important in this is when talking about, trade planning is that you need to be planning your trade to your first profit target. So even on the 4 hour, we're talking higher time frame levels, right? May, that would be my first profit target. If we break the low of the range and fail structure, if I'm looking at the 4 hour, potentially even something as like that, like breaking the actual low at 29.5. But your profit target, your initial profit target, you don't want it to be so far away that there's a lot that can happen between now and then, And that's most people's problem because they essentially, they'll be like, oh, I took a trade and I planned it and it worked out, but it was an 18-to-1 risk reward. I'm like, great, but that's not an effective, valuable trade. Because even if you can get those extremely high risk reward ratios, you're probably targeting stuff like your second or third profit target instead of your initial one. So when we actually look at that as far as like the levels we want to do, higher time frame, what do we want to see? We want to see what happens at May. We would then want to see April Q2 would probably be, hypothetically, that'd be April Q2 would be number 2. And then your third profit target would be down here at the previous monthly, 3. And each time this is happening, right? Each time you're hitting a profit target, you're moving your stop loss up. We hit number 2, you move your stop loss up. Hit number 3, you move your stop loss up. And that's the entire point because, not to beat a dead horse, but I mean, most people can't get it in their brains or they know to do it, they just don't, is that they won't move their stop losses up because the greedy part of their brain says, well, but if I get stopped out and it keeps going, then I'm going to be mad. Well, that's not the effective way to look at it. You want to look at a risk neutral or a risk off essential trading strategy, right? So if you're risking the 2% of your position of your total account, right? If you're risking 2% of your account in a trade, and now you're past price hits your first profit target, and now your entry or your stop loss, which was below your entry, now goes to here. That risk to your account is 0. You have no capital risk to your account. And this does 2 things. A, it means that you can't lose money, you can only make money. And B, now that you've taken that, you're in a position that has no risk to your account, you can now re-enter a position worth 2% of your account or 1%, whatever your risk profile is. And that's what you're trying to do, is that you can then try and take multiple positions at once, stay in multiple positions at once, and continue to essentially uh, gain, continue to maintain positions and create new positions while not being underwater, right? And again, like, this is a very hard concept for a lot of people, and I know why. It's not the easiest thing in the world to kind of get through your heads, but at the same time, it's like most people will do two things, and they'll do two things badly. They'll over leverage with too much of their account at risk, when really, take this as a little like step back. If you're doing that, if you're doing 30, 40, 50 X's on accounts, or you're using 10% or more of your account when you're taking trades, you're over positioned. You're too allocated. You have too high risk in the market. Now, if your argument is, oh, but I'm not making enough money per trade, well, focus on a percentage. Don't talk about your positions as, oh, I got a $10, that's how much I'm risking in a trade. Think of it in the terms of percentage. What percentage of my account am I risking in this trade? Because what that does, if you remove the dollar amount, most people are not extremely wealthy. I'm not assuming anyone in here is a multimillionaire. The problem that most people have is that once they start getting in and building an account and they start taking positions for a couple grand, their brain changes, because now you're extremely emotional, extremely fearful, because $1,000 will change a lot of people's lives, and it's not a small amount of money. So if you think about it in terms of your percentage originally, when you're trading your plan, you're executing your positions, that's the essential best way that you can look at it for starting to take large positions. It's like Will and I. Like, Will and I have done volume positions, and, like, not to toot our own horns, but we've done probably combined a couple billion in volume, just in, like, overall in the top stuff and positions we take in 100xing on low time frames, doing some scalp stuff. Like, over time, I'm sure we've hit that mark, right? Easily. The problem that most people have is when they take positions and you look at your P&L and there's oh wow, there's a couple zeros there, people start to panic and they start to de-risk and they start to doubt themselves. They essentially FUD. And, like, the best thing that works for us, and especially Will has always harped about it, is, like, think about it in terms of percentage. Then you don't care. Like, your brain turns off, like, the dollar amount. Like, I wish I could take it off for like BitGet. I'm trading with BitGet mostly right now, and just because it makes it so much easier to trade, right? You can think a lot less about what's going on because that's what's happening. So, any questions right there, right off the bat? Little, go for it. Mm-hmm. Here. So this is a good point. So there's two essential ways I look for, uh, you know, high probability trades. Now, your highest probability trade is going to be this. It's going to be shorting the secondary failure, because you've already failed it once. That's the first failure. And now you're failing. You're essentially failing the failure, right? If this comes down, creates a low, creates a higher low, and that's the higher time frame failure. That's your initial failure, right? Once price creates a new low after the low you created, that's your secondary failure. So now essentially you're shorting. This is the highest probability trade because you're shorting the failure of the failure, right? So your probability increases because you not only have you said, well, we've lost the level, we've bearishly retested it, and we've lost the new low that we created outside of the overall high time frame picture. Now, this is a very expanded view. Obviously, I'd probably be looking a little bit lower time frame for that higher low failure, creating new lows. But just in general, what you're trying to do with this is that's the higher probability trade. That's the higher P&L trade. The problem when you think of, like, higher P&L trades is that you're going to potentially get stopped out several times. So even though it's a big difference from saying, well, if that's my risk reward there, essentially, like, I'm shorting that and I don't want it to gain it that level back to go back to the upside potentially. You're not going to get as much entries with that position, and you can only afford to get stopped out once or twice. If you're doing it back here and still targeting the same stuff, you can be stopped out more, but you need to be more proactive as a trader, because what you're seeing then is, you might get stopped out really quickly, and then it might lose some levels again. You re-enter, stop you out a second time, and then usually when people get stopped out 2 or 3 times, it messes with their heads. People start doubting themselves in the trade plan. And realistically, if that ever happens, it's really simple. You plot whatever level invalidates the trade. What's the gain? What invalidates the trade? Right? Any short that would break out of the structure. Do you have an answer there, bud? Egil? What would, no, that's all right. That's all right. What would invalidate the short? Like if you're taking this short from that, like the bearish retest of the low levels, what invalidates the short? Yeah, a gain back, right? So essentially, it's essentially something like probably that invalidates it. So if that's your invalidation, you can continue to short until you do that. Because if price then comes up and then gains the level which is supposed to be your entry, your first mentality shouldn't be to essentially short just because it's retesting the level. Oh yeah, it's going back to my entry. No. You're thinking about it the wrong way. Then you flip your bias and you long instead, because now you're gaining it back. And this is why we always talk about that's the level that matters. Why? Well, if you're coming down to a level, your first response might be, if we're going to come back down and test this in a higher time frame, what's the first thing you want to see? You want to see a potential, high risk reward bounce play back to the lows that we created. What's the second trade you want to see? New low created bearish retest to create new lows. What's the invalidation of essentially the downside? What's the invalidation of the short? If you have this, anything that goes like that to come back up to the July Q3. So in this one here, this basically, I'll just put this as green. The green one is I will not short because we're bullishly back testing the swing. This is the initial one, this one here, because if price comes back down to the level, there's demand zone, there's structure, there's a swing here. This is where you want to see the initial bounce. For the failure, what do we need for confirmation of failure? Should you ever short if price is coming down into support? No. We know this is support. We know there's demand there. We saw the buyback, how strong it was from Friday. So what should you ever short into support? No. Should you ever long into resistance? Absolutely freaking not. So that's the only type of plays when you look at like what can actually happen. And when you look at the levels and you can isolate levels like that, you can then use the other stuff that we have that helps you like, okay, what's the probability that we're going to gain this or lose this, right? So some of the stuff that we can use that I think is kind of effective, the trend, the bars or the bands, the Trendmaster bands, and that's a very simple one. You just come down here. I turn on liquidity grabs because I'd like to see liquidity grabs, and then I also turn on the bands type Trendmaster. And this is just a combination of several bands together that gives it a. So sensitivity for the bands? Yeah, it's the same as everything else. Increasing the sensitivity overall just increases the amount it fires, or the more it moves more quick. Yes, it gets more tight. It gets way more tight. And then if you open it up, it gets a lot more loose. So on a higher time frame, you might want to try tightening them up, and then on the lower time frame, you might want to loosen them up a little bit. It's generally like here, it's too much. That's essentially just not giving you any data. So maybe somewhere on like the higher time frame, you tighten it up to 7, like on the 4 hour. I tend to think about the 1 hour at the default of 5 is usually round about the best. But even here, you'll have some deviation of it. Generally speaking, the sensitivity at 5 tends to work always. I mean, even here, like on the bounce back, right? It bounced back perfectly within the structure. Didn't do it here, but then we had failure, and then we had secondary chances to short, essentially where it was telling us to short, right? If it's telling us to short there, it literally gave us the level. To the downside as well, the buyback, hold, continuation, move back up, getting into resistance, failure, secondary failure. We're now failing under the July Q3. So that's something that I like to use as far as like manually trading. Same thing with the Harmony oscillator. I don't really mess around with the sensitivity stuff. I'll turn regular divergences on. Hidden divergences, most people don't understand the difference, so I just turn it off. Essentially, when you look at regular divergence means that there's a very high probability that you're going to see a major reversal because of a bullish or bearish divergence. Hidden divergences essentially mean you're looking at a pullback, but a continuation in the overall trend. So you can use those, but understand that may not be the optimum, short or failure or long or continuation. So that's the way I do it. If there's that, sorry. Oh, multiple divergences. Yeah, so we have it built in where it'll actually chain. Let me see if I can find some on the 15-minute or the lower time frame. Actually, I'm gonna have to go down with like the 1 minute or something because it's very rare to get those on higher time frames. But here's an example. You get a chain divergence, and we have that built into the engine already in the indicator. So you get an initial divergence, you get a secondary divergence here, and then you get a third divergence here. So now you're talking about like a bullish divergence of a bullish divergence, essentially. Does that make sense? Yeah. It's on that time frame. Yeah. You know. And yeah, I mean, like what's super strong in the no, even I can't be bothered. I'll use the 3 minute just because you can actually get some plays, or the five even. I For me the 1 minute is just there's the amount of data, the amount of stuff happening so fast. About the only reason you'd ever use the 1 minute anyways is if you're building high frequency trading bots or algorithms. Something. Yeah, you can. Like I don't recommend people to trade on it because realistically, by trading on the 1 hour and the 4 hour, you can do it without the added pressure of, well, how am I managing my positions? Realistically, if you're going to be trading on these low time frames, what do you have to do? Well, you're going to have to market in and market out a position. So already there, you're going to be paying. Uh, if you're limiting in and limiting out of, let's say, of a long or a short, if you're marketing in and out, you're paying 3 times the fees, 3 times at least. So that's already one thing. And then secondly, and the big one is that price can move so quickly because at the low time frames, if you're scalping, you have to use leverage. Like the only reason why you can use like trade on low time frames is because you have higher leverage. The movements, the price movements between here, even on the 3 minute, like what are we doing, right? Is 0.3% enough for me to market smash a short or market smash a long? No, because I don't want a zero point 0.3 of like a 1x position. But if I put like a 20x on there, right, and that zero point 0.4, zero point 0.5 now essentially goes to 10%. Could you make 10% in 20 minutes? Would that be a good position? Absolutely. So that's the whole point, is that we generally don't recommend it because most people don't understand leverage. They don't understand, they haven't spent the hours that it takes to go, learn your exchange, learn what margin ratio you have, what's your maintenance margin, what's your, how do I set up the bots on there? How do I set up take profits? How do trailing stops work? That type of stuff. If that makes sense. Right. And what was your other question, Egil? Yeah. No. So the problem with a breakout trade is that people will say, "Well, price is now below it," and then they'll short immediately. Like they'll basically say, "Oh, we're underneath the July Q3. I'm shorting." Right? Or here on the 1 hour, right? We I mean, that's the thing. It's like you're not actually trading the breakout. If you're trading the breakout, your price is going below the level. You're shorting as it goes below, right? Versus here, what I'm trying to do is, let me just turn this off so we can see better. Right, we closed below the level. Right, we closed below. We bearishly tested the level we wanted to fail at, and we had continuation. So essentially, what you're looking at lower time frame is from that low we created. Once we lose that low, so essentially the initial low we created, which is there, then I'll go lower time frame, say like the 3 minute, right? So higher time frame, I'm interested in shorting that essential loss of level. Did we get a loss of level? No, we didn't really get one until like up here, and most of the move was already done. So again, if you're shorting the level, most people what they'll do is they'll try to short as we're breaking out, and then price will retrace to test. So that's why, like as far as breakout, I'm much happier shorting the secondary low or the secondary failure than I am shorting July Q3. Yeah, so we would call it a swing fail of a swing fail. Yeah. So you can do that, and like I said, they're higher probability trades when you actually get significant closes underneath. Like even here, like where am I at? Like I was on the 3 minute, right? What are we seeing here? Secondary close below. We're seeing some secondary failure. Pretty good risk reward for some continuation to test that structure the downside. But what are some things that are going against us? Let's even here on the 1 hour. Let's look at a few things. First of all, we're doing a liquidity grab. It's not the price. The hour is still open, so it can still absolutely continue. But we're doing a liquidity grab because the pop back up is good. It's strong. So we're grabbing liquidity to the left of us. And that's again, this is just a setting on core trend, which allows you to then see show liquidity grabs, right? What that does is it just tells you that it's temporarily broken, and then it's gaining back above. Now it won't lock because the hour is still open until essentially the end of that hour. There you go, it just disappeared. So you're seeing a liquidity grab, but it's not guaranteed yet. It's not like, okay, yeah, that's happening. What would give us a good idea of a liquidity grab? You close back above stuff you've lost. So you've got 22 minutes to see what happens, right? And it's going to be popping in and out until it locks in, and it'll lock in at the close of the hour if it hits. So let's use some other stuff that we can have like to our advantage, right? So let me just see. Oh, good, I didn't delete that stuff. That's where I deleted it. So what's some other stuff we could see in the structure? Well, failure, we had this first initial chance to short it, to come back down and break levels. We've now broken levels, and we're still accelerating to the downside, right? There's no evidence that we're essentially going to be moving back up yet. So what we can do then is that, okay, well, we know where we are in the 1 hour. How about with volume, right? Looking at volume and structure, what kind of sticks out even here on the 1 hour? Well, probably up here at 30.6 to 30.6. Like you've got a very interesting block here at the weekly open. It's a couple things. It's the local high volume node, the point of control, this blue thing, right? So that's a very interesting level in the overall structure. You're also seeing, where you are as far as volume wise, like what's in control. Bearish volume in position, bullish volume in position to move up, to continuation up. How about at the highs? Do we have any really nice failures? Yeah, we had an initial awesome failure to come back down and dump. When you see something like that in an hourly close, you're then looking for the bounce failure to move back down. Really easy stuff like this on the higher time frame, it adds a level of confluence and a level of saying like, well, okay, we're failing and we're doing stuff, right? Here's the secondary failure. You got some, very overbought structure. You've got your initial potential break in the overall upside move. Because what happens when you see a yellow dot? The blue dot is a break in the trend. The upside trend has been broken. The yellow dots on the harmony will tell you that we're now very, very overbought, but we're crossing back below stuff. So we're essentially going like this. It's telling us almost that we're doing a swing fail, right? It tells us that we're losing levels. So you're getting some initial failures. You're seeing that what's in position and what's not. Where is this? There we go. I was trying to use the macros, keyboard macros. But then you got stuff like this, like, red volume in position. This is still the high that matters. You're not really gaining anything back as far as strong or structure wise. And you're a continuation failure, secondary continuation failure. Even here, what did we get yesterday, right? We got a really nasty liquidity grab that just grabbed all the local long liquidity, then closed right back below. for continuation down. Yeah, we had a close of 1 hour like volume in position, but did we have any gain that confirmed that volume? No. And this is kind of like a good point of what do you need essentially if you're using the MDVD and you're seeing that stuff is in position, which it was arguably in position there, but then the next candle price doesn't do this. If price does that, then I care about that being the low in the structure. Price didn't. Price went straight down, and it's continuing. What's something else that we can use in the oscillator? Well, we're getting very oversold now, right? And even here, there's still potential for continuation down. We've had nice slides to the downside. The buyback is starting to slow down. The wicks to the downside aren't as strong as they were. And we're getting, very, very bottomy signals coming on the oscillator. Does that mean that we're slowing down essentially? No. Where's the majority of the volume? It's right above us. We'll use that in a second because that'll tell us some stuff. If that's the majority of the volume, that's the level we want to close above on the next hourly candle. Otherwise, there's a potential that we can have a continuation move down because now we've got more and more people essentially. Shorts are in position as price is below where the majority of the volume is on the candle. What's some other stuff we can use? The on-chain metric bundle. This thing is great, and my favorite thing. I will always say this. I have retail stablecoin demand, and I have it on with regular divergences, and I invert it because I want to see when there's very high demand. That means that we're dumping in the market because we're talking about retail stablecoins, right? That means that retail traders are moving into USDT, USDC, all these different stablecoins, and the demand is very high. So high, in fact, that it's like the highest it's been in a very long time. The last time it was at this level, we're talking about structure that we did back here, right? Potentially, it was so high here, and we bounced and went flat and didn't go up. But now we're seeing that, hey, we're getting some very, very overbought conditions. How about on the 4 hour? Anything that's kind of sticking out? No, we had a bearish divergence on that. Very low volume in this area because obviously we went straight up. Where's the next major volume area? It's much, much lower in case we end up dumping. How about on the oscillator? Do we have anything interesting? No, it's running flat after being very overbought. It went sideways, and now we're back into, potentially quite good for a continuation, right? There's nothing that says we've broken down and we're nuking essentially the new lows. There's no evidence of that yet. So do we have volume in this area overall to continue? Is it like looking at the volume profile? Is there still structure? There's still order, so we don't want to nuke straight through stuff? Yes. So that's good. Because once we start losing the floor of this stuff, the moves are going to happen probably pretty quick if we come back down to test stuff. So higher time frame, right? 4 hour has a lot of time to keep going. The daily time frame, yeah, it's broken down. The trend change happened back on Friday, where essentially we had that big wick out candle that broke some of the trend stuff, which is why I mentioned it on Friday because we did get a technical trend change because we made a lower high and a lower low, right? And now we've broken some strength to the downside. So at the end of the day, have we lost anything that's really catastrophic to the overall structure? No. Where are some major levels, especially on volume, that we'd come back to? 28K is one, 28.5, 29.2, that type of stuff. There's a very low volume area in here, and we still have the majority of the volume way down to the lows, right? All of the higher time frame volume is still way, way, way below us. So if we do start breaking down, we could break down pretty freaking hard. Much harder than people think. But then again, it doesn't matter, right? We can't predict the future, and it's not like we're trading on like the 1 week or anything like that. So even here, what do we want to see? We want to see something that gains above. We want to see something that essentially says, oh, we're potentially reversing. Until that happened, what's the priority? The priority is down. We're losing levels. The oscillator's down, is still continuing. The trend line, the fat line, is it still arcing to the downside? Yes. It's not flattening out yet. And that's a good idea of showing like where it is in the overall movement of its trend. It's still continuing. There's no evidence of it flattening out. Like here, it flattened out. We actually had a lower time frame trend break. We went up, and then we can only show the next failure. Failure of the daily open, that type of stuff. But so these are some of the tools that we can use. As far as finding levels to short, finding levels to trade, and most of it's kind of been done here, right? That 30.4 level Here's something also to do with some of the structure changes, essentially, right? Even here on the lower time frames, we're very, very, very oversold. Is there any evidence that we're gaining above yet? We're creating some higher structure. We've got some volume in position. If I just turn that off real quick, is there anything that says that we're gaining? What do we? No, not really, right? We've made a higher low, but we're not really gaining anything back to go higher. 30.4 is an interesting level to continue back to the upside, because gaining that even on the lower time frames, right? That's an interesting level in the overall structure. What's a more interesting level in the overall structure? If we're looking at like the 3-minute, probably that 3432. Does that make sense? Why that's an important level? It's a level that we held, lost, no bearish retest, lost the level above, bearish retest, perfect bearish retest, and then continuation down. So what you want to see now is what is the reaction as you come back down to some of the lows you created. So you want to see some potential holds, but where's the trajectory? Where's the priority of trends? To the downside. We're losing structure. We're losing levels. We're not creating higher highs. We're not making, significantly higher lows in the overall stuff. Where's the first initial higher low? That, right? Because that's when we, from the low, made a higher low, higher high, broken lost structure here. We're now below it. This is where we want to see hold. Loss of that is continuation. And it's the same time frame, and Egil, you made a good point, is that the high time frame, the low time frame, it's the same thing in understanding structure. Structure breaks, bearish retest, continuation. Retest of level, failure, continuation. New low created, bounce to retest previous structure, failure, failure. What's the level to gain above initially? There. What's the next level to gain above? There. And that now you essentially build a step ladder, which is we can use then saying the oscillator. It's like, well, it's deviating right now. Of course, it's deviating. We're on the 3-minute. We're making the oscillator's moving up, and the price is still moving down. So what we want to see eventually is some type of like bullish deviation that maybe at one last deep wick that then closes above or gains some stuff back. We've largely already done it there. But again, like I said, there's nothing evidently that shows that we have to stop with the overall trend of the downside. So we're still trending down, right? Even here. If we want to gain something, we need to gain something back. And that's why you think, okay, well, what are my levels as far as gain and loss? I want that gained. Why? If we gain that, we should go here. It's a good target. You might even take some profit there, move your stop into break even, and then target the weekly open. If that makes sense. So it's like I said, we want some continuation. I think in the overall structures using this stuff, that's some really cool things we can use, especially on like the oscillator. Again, defer to the higher time frames. The fact that we have this very high retail stablecoin demand, we're starting to slow down a little bit in the dump potentially. We want to see some gains back above. If the 1 hour closes down here, we could definitely continue. If the 1 hour gains back above 34, 32, it only needs to gain $80 essentially to put us in a potential position for a gain and a continuation. So there's a couple decent arguments there as far as like how to plan the trades as well. The big things being, I always say it's really simple things. Make sure you're planning your trade to your first profit target. It needs to be a 3-to-1 or better, right? Make sure that you're not risking too much of your capital. Make sure that you're not in too many trades or over trading. If you're trading the same thing like 30 or 40 times in a day, and your win rate isn't improving, you're basically going neutral or losing money. You need to stop. The low time frame plays, the low time frame trading is not good. It's not good for you. It's not good for your heart, stress-wise. Essentially, unless you're profitable on the 1 hour and the 4 hour, you don't need to be doing anything lower time frame. Like even the 1 hour, like is still a great learning tool time frame wise. The 4 hour is the best, I think, but the 1 hour, even here, you can take good, solid TA trades. Based off of high probability, based off of gain loss of level. And at the end of the day, you're not going to win every trade, and you shouldn't hope to. You have to win at least, some trades. And if your risk reward is high, like 4 or 5 to 1 per trade, you don't even need to, like even 3 to 1, on a risk reward, you don't need to win half your trades. You can lose more than half your trades because most people do. But if your risk reward and trade planning hits your first profit target with a very high probability, you could still be profitable. And that's what blows people's minds. They think, oh, what's my win rate? Oh, I want to win every trade. Well, you're not. You're going to lose most of your trades. Most people lose most of their trades, or at least half. So I think there's a lot of things that go on with that people kind of like forget about, and they kind of blow their minds a bit. It's like they get worried essentially about, oh, well, I've lost 2 trades in a row. Well, if the trades plan is good, then it shouldn't matter. It shouldn't bother you. You should look to essentially continue doing what you're doing until proven otherwise. Unless you start hitting a rut where you go from pretty profitable to then starting to lose trades, I'm telling you, then something changed. Something you've done subconsciously has essentially changed. And that's what I do. I go back to my notes. I read through, making sure, okay, let's look at the trade. Let's look at what we're doing in the overall structure. Let's invert the scale. What are we doing? Are we gaining stuff? Are we losing stuff? No. What's the level to lose to go lower? Yeah, we want to do this, right? To go down there. And if we lose that, the continuation takes us back to the daily open. That type of stuff, right? And that's the only way to look at the market. And if you're continuously losing, then again, you need to back up, go back to a higher time frame, and study the market structure, study the gain loss level, because that's what most people don't do. They try to, run before you can crawl, and not saying that 1 and 4 hour trading is crawling, but it builds the consistency, and you train that kind of fear and greed part of your brain out, because you're not panicking in and out of positions because you're trading on low time frames. And you're just seeing your P&L tick away, and you're seeing yourself lose money over and over and over again. So essentially, that's the big thing that most people get wrong most of the time, is that they continuously try to adjust their own trades, their own trading system, instead of looking at it from a perspective of, okay, well, I'm making money. I should instead, if I'm making profit on what I'm trading, I should look to ways I can improve that system, instead of like, oh, well, I feel like trying something new today and just throwing everything out the window. Like, that's not trading. That's gambling. That's like the people who are like, oh, but I went and won the $1,000 at blackjack because I used the martingale system. It's like, okay, you're gambling, and eventually that probability fails and you lose all your money. But a lot of people don't look at it that way. They think, oh, they'll continue to make money no matter what. So going back to some of the stuff that I use, stuff that I think is effective. Yeah, auto charting, obviously. The bands are great, especially on the lower time frames. When you see liquidity grabs, you see failures at levels. I think it's a great kind of confluence tool. The MDVD is very strong as well, because it allows you to see a lot of levels that you can potentially test, and it also allows you to see order flow by volume, essentially. Where the majority of the volume will help and dictate where the direction of price will go. Liquidations, again, people don't use this one enough, and I'm guilty of it as well. If I'm looking at take positions, and I know that intraday 100Xs and 50Xs are absolutely wrecked constantly, what do you look at? Well, if you turn this thing on, where we actually go and bounce to, right? Where we actually go is usually pretty freaking obvious, right? Oh, I can't believe we went down to 29.5. Why? We just got all of those, 20X and some 10X long from that position. And then we rejected. Then we bounced back and continued. Or from Sunday, right? Wick out, take all the 100Xs. Just now, what did we do? We wicked down and we took all of the 100X longs that were in place from the start of the week, from Monday, right? They're gone now. Where's the next major pocket of liquidity? Here. What else do we know is there? Like, essentially right there. If that's some liquidity, what else do we know on the 4 hour? Also the level we don't want to lose. It's an important level when the 1 hour and the 4 hour is the same structure, the same levels, the same close. It just tells you, yeah, that's a major level to hold. So what happens if we lose this and we create new lows? Well, the idea is that where's their liquidity there? Where's the next pocket of liquidity that really matters? There. That's why we target things like the May level's been on the boards essentially since we got into this level. If we start breaking down, that's where we want to go. What's after that? April Q2, not so much. But what about down here at 28K? 28.1, 28.5. There's some bigger high time frame longs that are down here. Here you're still getting the 20Xs. Yeah, there you go. 20X, that was it. The 20X longs, all of the 20X longs in this position got destroyed, essentially. So. Oh yeah. Yeah. So here's the best way to target. Yeah. So really simply, what do you look for? You look for clusters. So you look for pockets of liquidity that get taken, right? Yeah, you can target stuff for failures. Like here, when we had the pop up, like I talked about this last week, it's like, why am I shorting 31.2? It's a failure at the high, right? We're grabbing all of the local 50x short liquidity, and then we run all the way back down. What do we do here? We hit the first major pocket of liquidity that was in place of 20x's. It provided enough fills because people are getting liquidated. People are then buying for the buyback to go re-enter into the position, re-enter into the structure. Where's the next one? May. Why is May important? Because there's a lot of 20x long positions there that are built up. You've got some higher time frame, higher leverage stuff that got in place earlier. And what happens if we fail May? Where's the next big pocket? It's down here at like 28.1, 28.2. What else does that do if we come back down here? Well, we're testing the high structure of what we did back at the end of May. So you can make these arguments about like, yeah, I understand what you mean. Like it seems like a lot, but look at how the market reacts intraday. What's one of the most common things we do once we take out 100x longs? We bounce. How about 100x shorts? What about the pocket here? Why was that the big failure? Because you don't only failed, you had a second chance to enter it, like an easy entry back down, because you've grabbed all of the liquidity that was there without breaking the structure. If you break the structure of the upside, you're again grabbing major liquidity and then moving back down. So there's still pockets of stuff growing above us. But to the downside now, what have we done? We've grabbed quite a bit of the liquidity. It's not looking super strong on the current 1 hour. Absolutely not. It's bearishly retesting structure and levels. But what else do we know? We're also getting very oversold. You have very high retail stablecoin demand. So what does that mean? It means people are exiting the market to liquidity. People are afraid, essentially, because we've lost structure now, and we hit a couple of liquidations. What else do we know? Well, flow index is at the highest point it's been going back to flow for stable coins going back to the 14th of June. What happened on the 14th? Well, essentially the reason people are panicking is because they thought we were going to break out the top of the range. What people essentially saw was this. Oh, look, we're gaining the high of the range. This is what they thought was happening. Oh, we're gaining the high of the range. Let me get rid of that and then that. Right? Oh, look, we're breaking back above. We're gaining the level. We're continuing. Oh no, we lost it. It's all right. We'll keep longing. And then by the time you did this, right? You did this structure here from like this morning. It was done. You've lost the level. Then you've lost the next level. Is that a cha-ching thing? What was that? Oh, no. But yeah. So yeah, is that an important level? Obviously. What happens if we lose it? We look for retesting. Did we lose it and retest it? Yes. We lost it, retested, and continue the downside. Higher time frame, what's the important level? It's probably 31.2. Is that respect on the 4 hour? Yes, to the dot. That's the important one. Did we get any closes above for continuation? We got one close above. Did we bullshit backtest? Did we go like this? No. You closed above, and then the next candle closes below, and then you bearishly retested. Literally the easiest shorts ever when you think about it, right? You're at the high of the structure. You're not making a new high overall as far as wicks. You're then failing underneath that structure, and you're bearishly retesting. You're literally looking at this price went like this, came back, it literally went this, like, and it blows my mind that people are afraid to short this structure, right? Price comes up, creates a new, breaks some structure, wicks down, lower high, lower low. The old M pattern, we talk about that.
I think I have a perfect example for something like that if you want it. It's Ave in the 1 hour. It looks exactly like what you're trying to show. Is that it?
What do you mean? Is that it?
Up top. See, we had a
Okay.
high, yeah, right there, and then
Yeah.
we closed. We
High.
closed the low. Yep.
Yep. Didn't fail. And by the time you did this, you lost this structure. You look even on the 1 hour. This is an easy one for the daily. Almost any time frame when you're looking at the daily open, you can use the daily open to trade.
Well, Chris, so if you're trading this 1 hour or something like this, like how do you is trying the 15 minute for a better entry? Was that a because that's what I did basically. I've the high low the lower high rather played out perfectly in the 15 minute, and that's when I entered at 79.66. I could have entered a lot sooner. I was out of town I just got back in and saw this one playing out. Um, so I could have shorted like a lot higher, but I didn't want to just because of the that wick before that long wick that happened. You saw that close when we closed above it. That's when I got sketched out. So does the 15 minute gives you a better entry in the 1 hour
If it,
if you have.
if you're using the 15-minute lower time frames, you still have to remember that it has to respect that time frame. Like, it has to respect the higher time frame structure. So I think in that condition, and I think that's what you mean, is that, like, can I use the lower time frames to enter a higher time frame trade? The answer is yes. But again, that's something you should be doing. But at the end of the day, the lower time frames are going to look sometimes very different from the higher time frames. So at the end of the day, it has to be the same. It has to have that kind of continuation potential. It has to be respective. Like, even here, is there anything in here that looks like a potential long? Well, it's holding the level right now, this 73.7, right? Not doing it very well. It's bearishly retesting quarterly, two quarterly levels that are right above us. These are older levels now. But what's an easier level? Like, longing this low here, or waiting until we do that to come back to potentially the daily open?
Wait
This
until
is,
October. Yeah.
yeah. Because even if we bounce super hard here, we can still have a continuation failure. We're just bearishly retesting the level we already lost, right? So your priority hasn't changed. Everyone looks at this and like, oh, I'm going to long it because it's going to go up. It's like, based on what? Trend's still down. Stablecoin flow, even on the 15 minutes, still up, right? Even on the 1 hour, it doesn't look as bottomed out as Bitcoin does. Stable coins are basically maxed in this level, so people are panicking and exiting or have exited, and large caps are largely being destroyed. You're starting to see some alts, like in like the category Avan. You're seeing some altcoins starting to make some turnaround. But at the end of the day, everything can be telling you to take a long, but what's the stop? What stops you from taking a position? It's the gain or loss of level. Yeah.
Yeah.
Yeah. If it doesn't do that, it doesn't matter. Because
I'm
this thing
I'm
is
guilty.
just,
I
yeah.
don't look, sorry, man. I don't look left more often, just because, like right now, when you said there is that structure to the left that we are holding right now. You see, I didn't even see that. All I'm worried about is the daily open or the nearest level, like April Q2, October Q4.
Yeah.
Once it does gain that and there is a close above, that's when I change my bias and go for the opposite position. But like I should not be doing it. I should be always looking to the left because I don't. I'll be honest with you, and I don't look to the left more often. I just wait for support and resistance, order blocks on auto charting, and just kind of go it from there.
Yeah. That's the thing. It's like, if you're going to trade anything, as far as like what's the important level, what's the important structure, um, the thing that sticks out in my head the most is you're either going to do it one of two ways. Either you're going to just blindly take the core trend, like essentially 15, like 1 hour or higher. You might have to change some settings if you're putting it on alts, right? You have the quick start for alts and whatnot, which gives you some better settings. But at the end of the day, if you would have just taken this trade, even if you had entered here, right? And this is why we have it. So like people have that option to essentially, take that your max area where you could have essentially gotten out an easy 11% over the course of 2.5 days. You swag on a little bit of leverage, some good trade management. That's a pretty decent trade overall, and you can do that. And I recommend you do that because that's why we
Plus,
made it.
we have a section that fires the 1 hour and the 4 hour that I constantly keep looking at, and then I just go to TradingView, try to see those trades that fired.
Yeah.
If
I mean, exactly. Yeah. Right under here at premium alerts, that's why I built those in. And I think if I look at my,
yeah, you're
so, no. So in the Discord under premium alerts, we have 1 hour core trend, 4 hour core trend, and then we have like 15 minutes crypto alerts. And in there, I put stablecoin demand on the 15-minute, and I put Bitcoin and ETH trend changes on, the oscillator.
Dude, they are so important. They are. I look at them on the daily, like every time. They are very, very important because it literally gives you a heads up on what alerted. What for because it's default settings, 4 hour default settings,
Yeah.
and you can't mess around with those because that's default settings. It's like default 4 hour. If I want to set a bot, I don't have to mess it up more in the settings. I leave it at default in the 4 hour, and I just try to go to TradingView. And trust me, like 75%, 80% of the time, those alerts are very valid. If you have a proper stop loss, you could make money just like Rakin said in the span of 2 weeks.
Yeah.
But most people don't. Yeah.
Yeah, and that's on me too. Is a lot of people just don't look at it enough. But I think it took me a couple of days to build all those alerts in. But I think total I have 200, 200 or almost 200 technical alerts that fire in there, just off our thing. You know, oh, premium. Yeah. I got premium, and then I also have the plus for stocks and Nasdaq and OTC, so I can see everything in real time.
Well, it makes me that I use it. I am always there, so don't worry about that. It's important to me.
And even stuff like there's one in there about daily on-chain
Yep.
alerts. That's a weird one because people don't understand and read it. It's like, well, the total market cap every 24 hours it'll give you an update based off of UTC, and it'll tell you overall what things are as far as like the
Exactly. It
confidence,
tells
the
you
on-chain.
everything.
Yeah, and that's it. Literally, every 24 hours you're getting a perfect update of like what's happening on chain, and like people, it takes 5 minutes to kind of think about where's the general idea. It's like even this morning we had a sentiment. The sentiment oscillator was super down. Minor confidence super down. On-chain volumes increasing. Holders in profit is actually going up. Long short ratio is still higher, like still 61%, but it's much lower than it was like 6 days ago, where it was like 73%. Open interest is low. It's been going down. It's at like 58, and there's very little very little whale activity. So
You
the
see the
social
long and short ratio? It's at 61%. People are more long than short.
yeah.
I look at it as
So even on like as an example, we usually have it automatically highlighting stuff as well. So if you see like today, it says the on-chain metric bundle alert, the social sentiment is becoming overwhelmingly bearish because that's the one that changed the most, right? Or the one before that, minor confidence has increased substantially. Minor confidence metric is going up. That was yesterday's. So what is that telling you? Miners, whales, big boys, they're getting more confident. The social sentiment, basically, that's actually scraping data. Like, no shit, we're getting data outputs from Telegram and Twitter of people saying, scam, dump, and that's one of the easiest things as far as like extra data. So now you're basically saying everyone's saying it's going to go down, it's going to continue dumping, blah blah blah. Everything's doom and gloom. And what have we actually done? Well, yeah, we broke down, we lost some levels, we retraced a bit off the highs. The overall trend is still up. We're just not in the position anymore because we've lost levels to go back to the downside. At the very least, Aave, I want to see this sucker to come up to like 76 to fail, right? I wanted to see it come back up here and do a better test. But, are we changing anything massively yet? Not really. What about Bitcoin? How's Bitcoin looking? Bitcoin looking kind of ass. What's the 4-hour close at? Yeah, so we still got a lot of time. Still down, haven't lost anything. So we're getting to a point now also that we're extremely oversold. Like the what do you call it? The flow index, like I said, hasn't been like this in a long time. And just to kind of go on to some more indicator based tools, like when was the last time it was at a value all the way here? Well, it was probably back on like the 14th of January. What happened on the 14th of January? We had that major dump off a cliff. So it just tells you how crazy people are. Is that people are feeling the same, like, essentially the flow index was as low as it is now back there, or previously after we did the big dump back here. And we still at that point had a bounce back of a couple $100 from the low. Right? Once it actually started breaking, it still gained 3%, almost $1,000. It went up $1,000 after it made the lows. So at the end of the day, like most of the stuff with the indicators that we built is just essentially to help you kind of like not feel the emotional FUD of it, because that's the hardest thing to beat essentially. How about funding? Is funding still coming down? Funding is going up slightly, so it's not the best thing, but it's still overwhelmingly bullish. So I don't see anything bad happening until we break 30K, right? Everything in here essentially is for, well, see if you get a higher low for continuation. Trend is down. Have we shorted the trend? Yes. Why? Because it's easy. Once trend breaks, you get failure, 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 big nuke, bearish retest failure. So trend's down locally. That's all it is. Higher time frame. We're making new lows? Not yet. We're potentially from making, from this structure, we made a high and a low. We made a higher high. Until we lose that or lose even 30K, we're still potentially making a higher low. So what does that mean? If you're making higher highs and higher lows, the trend's technically still up, no matter how shit it looks on chart. So the biggest thing here is essentially just use the tools that you have available to you and make smart decisions, not emotion-based ones. Because like the TA stuff we go through, you can learn it in a couple of weeks. But the mentality of executing the trade, which is, okay, if this happens, I will do this. How about the 4-hour? What do we have on the 4-hour? Well, all of the volume in this zone is literally the July Q3. What does that tell you? That's the major important level to gain to go higher, right? That's it. That's everything. And until we start gaining back above the local trend in the range, from the high of the range coming down, we lost the low of the range. No. Is there a potential to continue? Yes. Alts right now, like USDT dominance is up. Look at USDT dominance. It's, increasing. It's been increasing since Monday after dumping pretty hard. So I don't know. People get way too emotional and it pisses me off. But what are you gonna do? Well, look at ETH. ETH. Did we have an easy short on ETH? You're damn right we did. We broke down, closed, failed locally, and then failed at the daily and weekly open to come lower. We've also lost the 1933. I told you that yesterday. If you lose 1933, short it. You're coming back down. What did we do? Came back down. Are we holding the low that we put in from the weekend? Yeah. Does ETH still look pretty decent? Like it's not losing structure. What's the next major levels? If it comes down and loses that, going there. That's all there is to it. That's all it is. Over and over and over again. And like the flow index, 4-hour is very, very high stablecoin, right? And most of the time when we have these positions, we're still able to then say, okay, we're going to see some turnaround. Do we see any indication of turnaround yet? No. We want some type of leading edge, right? What's the first that price is breaking down? Well, we made a lower high. Flow came back down and closed, much lower, essentially opening that candle pretty low. So it came back down, made a new low, gained back up, and then essentially did a low pump up, like essentially a deviating move to the upside. So at the end of the day, it could be much higher. It could be, again, if we go back to like the beginning of June, nuke, basically an inverted BART to come back up. People just get overly like stressed out and worried about stuff. Let's see. What's Abe doing? Yeah, Abe's holding at a level, so. Okay. Shoot. It's based off of probability. So an example here, if you look at Abe, what's the easy short? Should you short April Q2? Because right, we closed below. Why wouldn't I short April Q2? It looks like a perfect trade, right? To target lower. The problem is we've already done it. We've already broken below, then popped back above, then broke down, and we're making a higher low. So if you're trading this now, you're essentially trading a potential trend change that would gain back to the upside. So you already made the low. So the liquidity's already been grabbed below us, and now we're essentially making a higher low. So for me, I'm not looking to short it until we do, I guess, the secondary failure. So usually what you would have is like, well, if you broke down, you closed, you want to see then the bearish retest, and then you want to potentially short that. The problem is it's a lower probability trade than shorting the next loss, essentially. You create a new low, you bearishly retest the level you just created, and then you continue. That's a higher probability trade than trading essentially the first bounce. The first bounce is good if you want to get like, if you're less risk averse or more less risk averse, and you're not afraid of taking, higher risk positions. The problem that most people have is when they're taking these things and bounces, they're like, oh, but I'm getting this, and then I have to get my stop loss really tight. Then it's going to stop me out. And people trying to short to break more structure and break more structure to the downside. But essentially, you've made the low, right? It was bought back. We're making a higher low. We want this thing to continue back up. We want the pump. What's the continuation down? It's that, right? And then you're targeting probably the next structural level down. Is that a good risk reward? No. So you'd have to get your risk reward really tight. Is the juice worth the squeeze? Yes, if we fail and bearishly retest, but then you only get like one or two potential reentries until you can't take the trade. Because if you take it, you can take the trade as many times as you want. The problem is that if it's going against you the whole time, you shouldn't just look to short to fail. Now that we've seen all this stuff, we see that we're overbought. We see that Bitcoin is overbought. We see the flow index stuff. We see all these things that's saying, hey, if we gain something back, we should bounce hard, right? If the structure was we were here, that same like oscillator was still up here when we were coming down and doing these lows, I'd be much more open to potentially short because it means that we're still essentially have a lot to go as far as trading and trending to the downside. But here I want bounce and continuation. Why not, right? Oh yeah, I got the YouTube stream in an hour, in 10 minutes. Any other questions on stuff? I know we've gone through a lot of different things, but just as a little bit of a recap, is like, talking about the trade planning, talking about your risk rewards, talking about moving your stop losses. And essentially the biggest thing you look for is trade execution. I know that that's a major level, 73.70. So I know that I don't want any closes underneath that. Since we're here, what do we want to see as the continuation? Could you have longed this level? Yes, absolutely. And Let me just check my trades really quick. 1 second.
And guys, don't forget about no. This is just a general. Don't forget about FTT. It can it did the thing that you guys were talking about a couple streams ago. Yeah,
Yeah,
I
yeah.
know. I'm just
It's a very high risk trade. I mean, it's a very high risk, high reward potential. But again, that's the whole problem. Like you don't know what you don't know. And for me, uncertainty doesn't make me more certain in my idea. Um, in fact, FTT has a great potential failure. Like it literally is doing the same thing that it did right here. And what did I say? Goes up, slow nukes. Goes up, breaks, slow nukes. We had an easy short on this thing at 1.9. Easy, easy, easy. And these things are moving 22, 25% in a very short amount of time. Right? So what matters? You want to gain something to go higher. Why would I want to long the breakout of July Q3 instead of coming back down and we do a higher low anywhere from 95 cents or potentially higher, potentially even here. That's the whole point. People kind of like they're too. Most people essentially look at this structure and they're like, oh, but we can go all the way up to $22. Yeah, we could. Are we going to? Maybe if the thing restarts. But since the nuke, this thing is essentially farming out a giant liquidity grab from basically from the low to the high, 2.5x. From the high to the low, probably 60, 70% down. Right? You're just wrecking liquidity locally. So when you're in this structure, what are you doing? You've got the one that was kind of difficult to maybe short. You got another one that was easy short. You had a long on essentially the structural higher low that mattered, right? You had that. The gain of that level exactly after you came down and made a new low. So you're making new lows in the overall trend and making lower highs. Is the trend still down? Yes. What do you need to break the trend? Make a new high, make a higher low. Until you do that, there's no evidence that we're going to go back to the upside. So what do we have? What happened here? We had a swing fail. Not even just a decent swing fail, a freaking awesome swing fail. It popped up, loss of structure. We do this big lick to the downside. Where do we want to see? We want to see secondary failure. Failure, all the way down, essentially. Failure to regain the level, failure to regain the high. And then by the time you were re-losing the structure level here, under July Q3, it was done. It was over. And it had to continue to move down. So what are you doing now? Coming back up, failing at structure levels. What do you want to see? You want to see it come back down to the May. If you gain the weekly, where do you want to go? You want to go from the weekly open, you want to go that to 1.76, and then you want to take it up all the way to 1.92, right? And then you reassess. Like with these tokens and stuff, don't focus on the I want to make the big 2,000% move. Like I want to catch that thing. It's like it's not going to happen. And if you do, you won the lottery. Good for you. The problem with those things is that it's not repeatable. I take aggressive often profit targets because I don't care which way the market goes in general. My overall mentality is I accumulate Bitcoin, I accumulate capital to take positions to increase the size of my positions. And as I increase that capital, taking low time frame aggressive positions, I don't care if I miss a 100x move. It doesn't bother me. I'm not going to like cry about it because thinking about those things is stupid. At the end of the day, it's the slow grind. It's you watching your P&L go from whatever it is to exponentially increasing, right? And now you're able to trade with that much more power behind your trades without changing anything that you're doing because the market's liquid enough that it can handle millions of dollars of trades at once, instantly, every microsecond, like tens of millions of dollars. So don't worry about the big moves, man. Like the big moves are cool and all, but they're not. And I know Egil, you're really good at finding micro caps and stuff, but at the end of the day, it's like I trade the high caps, I trade Bitcoin, I trade ETH because I can repeat stuff. I can repeat it day in and day out, and that's the only thing that matters to me. If you're trading and your trading isn't two things, consistent and repeatable, like that's not TA. That's not a trading system. That's luck, if anything. So, me too. I got to go do the other stream. So, I think that's it. We'll leave it there for now. Hopefully, we get the bounce. We'll see what happens. Yeah, we'll see what happens. Alrighty. Yeah, thanks. It was a lot of fun. Hope you guys got some out of it. Okay.
Fully.
Yeah.
Hey, see you.
Alrighty.
Hey, Chris.
See ya.